again from Core Wealth. We're going to be talking about what happened in October 2020. We're also going to touch on some of the things that have happened subsequent to month end, just sort of the first week of November, given all the excitement around the US elections. We're starting to see some positive signs around the world and in South Africa that we think will be good for portfolios in the medium to long term, and we'll touch on those as well. If we have a look at what happened in the world or what was driving markets in October, presidential elections in the US and the coronavirus. The presidential elections, at the time of recording now, the news networks have called it, and Joe Biden is president-elect, although Trump has not conceded and he's still fighting a number of states in the courts. Expectations are that those won't be successful and that Biden will become the next president of the United States in January next year. This we see, and the market generally sees this as positive for the global markets and particularly for emerging markets. You may have heard the phrase risk on, just meaning that global investors are now prepared to go and invest into other economies around the world, particularly emerging markets like Brazil, Russia, India, China, South Africa, and we expect that to be positive for those markets over the coming years. Coronavirus in October, there was continued increase in infections, in particularly in Europe and in the US, and that did scare the markets. Although subsequent to month end, there've been some very positive announcements, one from Pfizer on their vaccine, and that saw the markets react again positively in early November. So if we look at South Africa during October, two big things: the president addressing the nation on how he's going to get the economy growing, and the Minister of Finance addressing the nation in his medium-term budget policy statement on how we are going to control government finances over the coming years. And the concern is in the medium-term budget policy statement as to whether we can get those controls properly in place and limit the growth of government expenditure, particularly in terms of the government wage bill. The infrastructure development, that's part of the growth plan. The concern there is just whether they can get enough or how they will finance that, given the high levels of debt that we have following the whole corona situation. But net, I think both of those are moving in the right direction. And if we have a look at economic growth in South Africa in the third quarter, those numbers have come out and they're looking relatively good. We've seen a nice V-shaped recovery already, and if we continue to see things improving from an economic point of view, we think that can continue to grow. The economy is expected to shrink by about 8% this year. But next year the numbers are continuing to grow. I think last month when we did this recording, expectations were for around 3.5% economic growth. I've seen some economists projecting as high as 5% in next year as we start seeing things pick up, which would be positive for the country. So digging into the detail of how markets reacted to all the things that were happening around the world in October, it was a very volatile month. Halfway through the month, the markets were storming ahead, looking very strong. Equity and listed property markets up healthily, but by the end of the month, all of them were negative. And we saw developed world equities down over 4% for the month. South African equities a little bit better than that, but still down quite a bit for the month. Emerging market equities were the only place where you had some respite, and they were just slightly negative, less than 1% down for the month. Listed property in South Africa, having been up strongly mid-month, ended the month down 8.5%. So huge volatility during the month. The rand was stronger during the month, and we saw that up between 2.8 and 4% against the three major currencies of the US dollar, the British pound and the euro. So anything with a longer term focus that had growth assets in it struggled during the month and would have had a negative return. But it's been interesting since the end of October to now, we've seen the exact opposite, and a lot of that underperformance in October has already been made up as the market has gone into what they call a risk-on mode, where having seen the outcome of the US election, global investors are more comfortable to be investing, particularly into emerging markets and to other markets around the world, and we've seen that pick up. We've also had the good news around very good outcomes for the vaccines, which have been positive, allaying the fears that the virus will have a prolonged negative effect on world economies. And so we've seen a number of shares reacting very positively to that in the first week in November. Now, long-term portfolios will have a bias towards growth assets, towards shares and listed property. And what we've done in this next section with this graph is we've taken each of our portfolios. Now, most of them are long-term portfolios other than the core wealth income funds, and we've shown how each portfolio has performed in 4 distinct periods. The first period being January to March, basically the market crash as Corona started hitting the world. From April until October, as we saw an improvement and economy started opening up, markets started going up again. We've shown October on its own, and then we've shown that full period from January to October. And what you see is that the long-term focused portfolios, when the markets came off in that first quarter, you saw those portfolios underperform. But then as things turned around, you saw them pick up quite strongly. And that graph is just looking in absolute terms. But if we look in relative terms as well, we see that when markets are improving, as they did from April to October, that we also outperform our competitors. So on a relative basis, we do well. Now you might say, well, then we should have been in more conservative funds from the beginning of this year, or at least in the first quarter of this year. But the problem is we don't know in advance when markets are going to do what they're going to do. October, as I said, was looking good for the first half of the month, and the second half of the month turned around. But what we do know is that in the long term, growth assets outperform over the long term. So in other words, they go up more than they go down. And that's why our long-term portfolios do have that bias in them, and we expect them, and they've shown it even with this negative period that we've had over the last couple of years. Even with that, those portfolios have managed to generate returns. Not in the short term, but over the longer term, they generate returns. And in the next section, we'll talk about some of the things we're seeing going forward that will support that in the coming years. If you think of the value of something, if there's high demand, its price will go up. If there's low demand, its price will go down. And we've seen that in markets around the world. Over the last number of years, there's been high demand for US tech stocks in particular, and not a lot of demand for other shares around the world, and in particular, emerging markets, of which South Africa is one. If we look at valuations at the moment, South African equities haven't been this cheap for 12 years. If we look at our bond market, we're the second highest yielding, so the second highest interest return on bonds in emerging markets. And the reason for this is that for a number of years we've seen foreign investors shying away from emerging markets and South Africa in particular. And we think we're starting to see that change now. And we think that we're going to start seeing there will be more demand for a number of reasons. We think emerging markets will become more popular, as we alluded to earlier, with Joe Biden as a president. Less strife, less noise, less fighting with emerging markets like China, and that'll be positive, or a risk-on environment where international investors will take their investments, their safer investments from the US or Europe, and start allocating some of them to emerging markets, which will be positive. There'll be more demand for those assets, their prices will go up. And in South Africa, we're starting to see things changing. We've seen electricity production start to improve, not at the level where it's going to be. We're still going to have load shedding until the third quarter of next year, but Eskom is being much better managed. and the electricity production figures are showing that. We've seen the right moves being made in terms of our long-term budgeting, more austerity around how government finances are managed, and those are positives. If we have a look at what's been happening in the mining sector, again, mines need electricity. Some of the mines can now start generating their own electricity, have their own power stations or smaller power stations to ensure that they have supply of electricity. All things that are positive and things that will drive our economy forward. And then lastly, just recently we saw the warrant of arrest being issued for Ace Magashule, the Secretary General, one of the top 5 leaders in the ANC, and that's a positive, because we are now starting to see the consequences for corruption being made real. If we have a look lastly at just from an emerging market point of view, this graph will show you that historically, as the dollar weakens, emerging markets are a chief benefactor of that, and their equity markets improve on the back of dollar weakness. And expectations are for the dollar to weaken over the next 2 to 3 years, and again a further tailwind for emerging markets in particular. So we think that looking at all these factors and analysing valuations and demand factors, we think that we will see the next 5 years will be much better than what we saw over the last 5 years, and that will reward investors with long-term portfolios and see that coming through in their portfolio values. That's all we wanted to talk about this month, but if you've got any questions, please give us a call. We'd love to talk to you. Thank you.